The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Ladies and gentlemen, welcome. I'm your host, Rachel Curlew, AVP of Investment Banking. Thank you for joining us for a special investor briefing where we'll be looking at Mayberry Investments Limited Q3 results. On the panel, we have Christopher Berry, our Executive Chairman, alongside CEO, Mr. Gary Peard. Welcome, everyone. If you're a fan of the content, then don't forget to subscribe. Also, hit the bell to stay up to date with the channel. We upload content like this once a week. And let me remind you that we have the Q&A segment, so stick around until the end of the program. If you want to embark on your investment journey, take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. So let's get into it. We'll keep the usual format. I will give an overview of the results, and then I'll pass on to Mr. Peard and Mr. Berry so we can do a deep dive. So let's start on the other slide. Can you zoom in a little bit for me? Okay, great. So for the 9-month period, the company reported net interest expense and other revenues of $1 billion relative to $5 billion last year. Operating expense declined 6.5% to $1.5 billion relative to $1.6 billion the prior period. This resulted in loss before taxation of almost $2.5 billion, down from $4 billion the prior period. The company booked a share of profit of joint ventures of $873 million, up from a loss of $68 million the prior period. All this translates to a net loss profit attributable to shareholders of $692 million relative to a profit of $2 billion the prior period. This results in a loss per share of 58 cents versus a earnings per share of $1.70 last year this time. Moving on to the other slide, let's take a look at the balance sheet. Despite the losses, assets are up 12% to $57 billion. Total liabilities are also up at 30% to reflect $33 billion. This is primarily due to the public bond offering we did in January of this year for $6 billion. Total equity, a slight decline of 5%, but still strong at $24.5 billion, down from $25 billion last year this time. This results in a net book value per share of $3.11 versus $13.78 the prior period. The other slide. In graphical form, again, assets up 12%, liabilities up 30%, and shareholders' equity down 5%. Assets grew primarily from a $2 billion growth in our loan book. Moving on to the other slide. This slide shows Mayberry's book value relative to its share price. So by now, our wise investors know that once the share price, which is reflected by the blue line here, is below the book value, which is reflected by the green line, the stock is trading at a discount. So Mayberry share price is at $7. The book value is at $13. So the stock is again trading at a discount, and a perfect opportunity is on the table here. So you should get some of the stock while you can. Moving on to the other slide, looking at Mayberry stock performance over the last 2 years, we're seeing here that the stock is trading around the $7 region. Last year, this time, it was trading about $8.20, and it actually peaked to $10.09 for Q2 of last year. So I have no doubt that the stock can get back there very quickly. moving on to the other slide, we're seeing here that Mayberry is an excellent dividend yielding stock. We paid year to date, we paid about 630 million in dividends. Last year we paid around 372 million, and the prior year 405 million. So again, not just an opportunity to get some capital appreciation, but it's also a dividend income stock. And the other slide actually strengthens my point. This is the net book value plus cumulative dividends. So net book plus dividends results in the price being the stock being valued at $16 relative to the book value of $13. So again, a great opportunity presents itself to get this stock. You can expect both capital appreciation plus some dividend income, as we are consistently paying dividends over the last 10 years. That completes my analysis. So I'm going to move over to Chairman and CEO here to answer a few questions. I'll start with my questions here. This one is directed to Gary. The book, you booked a net interest expense and sorry, that's not my question actually. All right, so profits were impacted by the 2 billion unrealized losses in the MJE portfolio. Can you shed some light on this, and just how do you feel about the stock market now, and what are your expectations for the next quarter or even the next year?
Thank you for that, Rachel. I think one of the key things that people will miss is that the loss attributable to shareholders is approximately $600 million. So what that means is Mayberry actually owns approximately 50% of MJE. So MJE generated $2 billion in unrealized losses. So if we didn't have that share of that $2 billion, was $1 billion, it masked a profit of over $300 million for Mayberry year to date, and which is in and of itself a creditable performance. But at the end of the day, part of our ethos is making money on the stock exchange. And so that brings me to the second part of your question in terms of the outlook. So, the majority of the loss for the quarter from MJE was driven by fall off in three primary stocks. One was SVL, the second was Lasco Financial, and the third was CPJ. You'd have seen where the inflation numbers that was just released. It shows that for the first time in 18 months, inflation has re-entered the range, the Bank of Jamaica range of between 4 to 6%. We think that augurs very well for the outlook on the stock market, because once inflation starts to temper, it means that it puts into play a reduction in interest rates. And as you know, Rachel, reduction in interest rates is positive for the stock market. As it pertains to the fortunes of the three companies I spoke about, I think we're going into the best quarter for most of them. The fourth quarter is normally the best for Supreme Ventures, so we look forward to a good quarter. The same is also true for CPJ. CPJ, the tourist industry goes into the high winter season starting December, so that we expect the results for CPJ to pick up. People forget that prior to COVID, their highest profit was just under 4 million. What we saw last year is that after the one-time adjustment, they had their highest profit ever, and we expect that they're going to surpass that for the upcoming year. So we have big and high hopes for CPJ. Lasco Financial, you've seen where they restructured, and they're trying to make headway in terms of their microfinance side of the business. But certainly on the payment side, they continue to record some very good revenues. So, for the foreseeable future, I see only upside for those stocks in the portfolio.
Thanks, and I absolutely agree with you there. Solid companies MJE is investing in, and I have no doubt that they'll continue to add growth through the MJE portfolio. So we can definitely expect some improvements within the next quarter to 6 months. The next question for you from me, Gary, we have seen where you grew your loan book by $2 billion, but your net interest spread, for the 9-month period has fallen. We know you're facing rising interest costs. Is it that you have not been passing this cost on to your customers fast enough? What's happening here, and what are your expectations for the next quarter?
So as I indicated before, you have to have a very good education in IFRS to understand profit and loss nowadays. So what we're reporting on is the Mayberry Group, and the Mayberry Group would take in the interest expense across all the subsidiaries and associated companies in the group. So what you're seeing is that it would pick up interest expense from MJE as well. And as you know, MJE offsets its operational and interest expense via dividends. So it would distort the group consolidated interest income and expense. But if you drill down and you're able to see the P&L for Mayberry itself, it's actually a positive net interest income. So Mayberry actually benefited significantly from the bondberry that we had raised earlier on in the year. And as I said, what the true test of the Mayberry Group's results for this quarter is to back out our share of loss from MJE. If you take out that number, you would see that Mayberry is making close to $400 million. And one of the drivers of that number is positive interest spread, and also our gain on another associate that is there. So we're actually performing better than what the headline number sees. But again, based on how IFRS is structured nowadays, when you consolidate, it pulls all the numbers from all the different subsidiaries, which is why if you look on the P&L, you will actually see where the P&L shows you a loss for, I think, year to date of 1.7. But the important number is what is the loss attributable to shareholders. And that number is $600 million, because that's when you back out what the public owns in MJE to show you what the true impact on Mayberry shareholders are. So, I mean, year to date, $600 million in loss, of which a material portion of that is unrealized losses on an MJ portfolio.
Thanks for that. So just to summarize, guys, it's an unrealized loss, and as Gary mentioned, if we should adjust the earnings, it would reflect in a net profit of 400 million for the company. You mentioned, Gary, you have a gain in relation to your joint venture, a gain of actually 873 million. Can you expand on this? Is this recurrent, or is this a one-off gain? What's going on here?
So that comes from our associate company, Chalmers Oasis. We own that property 50-50 with our partners, Muslim Jamaica. And, basically every 15 months we build a building. And so this was our second building that we've completed. We built, tenanted, and sold the first one. We've just completed the second building. We're in the process of finalizing a tenant. And so we'll continue that process. So once we sell this building, we'll look to break ground on a third building. So in terms of sustainability, it's something that can be sustained and will be sustained because it's a 33-acre property. After we've completed the second 100 square foot property, we've only used 5 acres of the 33 acres. So you can see that we have significantly more land to build, and we build based on demand. And it's not a financial stress, one of a better word, than either companies. So as we build and sell, we will basically book this kind of profit going forward. So we try to make it annual, but because it's usually a 15-month period, you might have a scenario where 1 out of every 2.5 years you see this kind of gain.
Okay, perfect. Thank you for that. Final question from me. Looking at your cash flow, we're seeing where you raised about net 6 billion from the public bond offering back in January. Looking at the same cash flow, we're seeing you made around $3 billion in investments. Anything special you want to share here?
Well, you can't give away the secret sauce before it's time.
True.
And in the MJE briefing, we spoke about the addition certainly on the MJE side, which we explained. This is the beauty about investing in the stock market. It's not a straight line up, and we tend to add material positions when other people are scared and are running out of the market. And in the last quarter, we have added some nice positions. So on the face of it, it might be shown as an unrealized loss now, but I believe in the next 6 to 9 months, we should make substantial gains from that. That's the reason you buy MJE. It's the only stock you need to own.
I absolutely agree with you here on that one. Chairman, I have a question for you. Mayberry is one of the first companies to introduce the concept of leveraging your stock portfolio to add value. We are big in the margin business, no doubt here. What advice can you share with investors who want to leverage your portfolio or are a bit hesitant right now due to the how the stock market is performing?
So I would say that leveraging one's portfolio is really a game for experts. So if you consider yourself an expert on the market, then it's certainly a way to increase your returns. But if you're just beginning in the game and you don't really know what you're doing, I think are you hearing me?
I can hear you.
Yeah. Then you use the margin facility at Mayberry to do other things that crop up, like paying school fees, buying yourself a new car, paying down on a house, stuff like that. So when you invest, your money is not tied up. You can access it to do other things, take care of your life while you sit back. Rather than selling stocks, you benefit from the appreciation and you pull off some money and go and make other investments. So that's what I would say about the margin.
Great, thank you for that. And also, just to add, the margin business, it's, as Chairman said, it's easy to access. I mean, you can draw the funds in 24 hours. It's a flexible repayment facility, and our clients just absolutely love it. I have another question I'm gonna throw to both Mr. Parrott and Chairman. So I love MIL, I love MJE. Why does the stock market not understand that the stock is a buy based on the NAV?
Well, I'll go first.
Okay.
What I normally answer to that question is don't quarrel about it, just buy. When the market finally figures it out, you're going to make a hell of a profit. So that's what we do at Mayberry. MJE, I think it's now trading at about a 25 to 30% discount. What that means is that if tomorrow morning we were to sell out all the stock in MJE, you would actually get 25% more than what you paid for it. So it's not, there are very few places you can go to earn that kind of money. So, the more people don't understand it, the better it is for us.
Absolutely, thanks for that. Anything from you, Chairman?
Yes, well, I think Kerry's first statement really echoes my feeling. I remember when Mayberry IPO, it was like 5, people ran it up to 8. I was not a seller at 8, but I was definitely a buyer at 1 and 2. And I think, what's the low this year, Rachel?
Sorry, I didn't hear you, sir.
I mean,
The low this year on Mayberry is what?
The other thing I would say to Chris is,
Yeah, it's 7.
yeah,
right. So I remember the days when the low was 1 and 2. So yes, it's undervalued relative to the asset value, but it's still moving in the right direction. And in the case of MJE, if you do a graph of the discount of all the similar type of companies on the JSE, MJE has consistently had one of the lowest discounts. So it seems to be a feature of the market where people like to trade these stocks at a discount. So there are several of them that's trading like that, and ours has the lowest discount.
Thanks for that. You were adding something, CEO Parrott?
Yeah. What I would say is, there are a lot of people who aspire to own real estate. And real estate doesn't go straight up. People tend to buy a piece of land for $1. And then when they sell it for $2, they tell you they made 100%, but they don't tell you about the interim period and the amount of money you have had to pay to maintain it. So from using an MJE was listed at about, I think, $7.30, 40. I remember what it was. And despite all the ups and downs, I mean, the stock is up to $13, $14. The NAV is approaching $15. So you quietly, you're about 100%. And what a lot of people don't know, when Mayberry started the MJE portfolio back in 2006, I believe, we started with 10 million US. And we are now, what's that, 13 years later, 17 years later. And the value of the portfolio, because even after this quarter, the equity in the company is approximately $16 billion. That's over 100 million US dollars. So you started a portfolio in 2006 with 10 million US. 16 years later, it's worth 100 million US. How many people have a portfolio that has done that? You know, so it's not about watching the downs, because that's actually where we make money. We invest in the market when other people are scared and are leaving, because when the market turns, you'll never be able to get the stock at these levels again. You know, so that's what we do. The people who understand it, I think they invest in the stock and they will benefit from it. And you know, those are the guys that will continue to make long-term value, and we welcome them, appreciate them. But more importantly, you know, we only earn $10 a month, right? So we'll keep buying every month, Rachel. And in 4 years or 2 years, when everybody comes to buy, it will be 1,000% higher. We'll sell to them.
Perfectly said. Perfectly said.
So Rachel, just yesterday, I was talking to Mr. Christopher Levy from Jamaica Broilers, and he was talking about the same thing, the stock price and the market is not giving him his good value and so forth and so on. And I said to him, you know, Chris, I remember when $6 was a high price for Jamaica Broilers, right? And people were selling at $6. And now, you know, I think yesterday and today, you know, the trading is close to 34. Mm-hmm. So, hey, you know, show me some fixed income that can do that. I don't know of it, so.
Neither do I.
No, I mean, when you say that, Chris, I mean, it's like the soap opera that's going on at NCB. You know, people are just caught up in that Netflix series and are not looking at the underlying numbers, right? And the reality is that the underlying numbers show a company that is valued much more than where the stock is trading now. You know, so the question is, do you want to be somebody who's here for the entertainment, or you want to make some money and buy a Porsche, right? Mm-hmm. So we try to be the latter. And here's a prime opportunity to buy this stock, because I remember 3 years ago when NCB was up at $230, you couldn't get any to buy. And now it's hovering between 60, 67, whatever it wants to be. And people are talking about, boy, we're not sure. You know, so the management, they've changed the management, but they're put the underbelly of what makes NCB work is still there, right? The profitability is still going to be there. It's going to work itself out. And as I said, I wouldn't be surprised. By the time they announce a dividend, it'll be too late to get the stock.
That is true. That is true. You know, again, investors, wise and steady wins the race. So while we wait until the stock catch up, Gary, you know, we'll just enjoy our dividend income on both MJE and MIL. I have a question for you, Gary. Can you give an update on the scheme of arrangements, please? Some investors would have missed the meeting that we had about 3 months ago. So can you give some update on that, please? The scheme of arrangements.
Well, it's difficult to give an update on a moving target. We're at the mercy of the courts, and that is something that you would not want to rush. But I think we're getting closer each day. We've just gotten additional approvals, and I think we're getting close to the end. So based on what I'm seeing now, we should have a full conclusion hopefully before the end of the year. But with certainty, once we get the clarity, because you don't want to move fast, you know, where the court is. But once we get clarity, as we get the approval to speak publicly, we will. But I'm cautiously optimistic that we should complete the whole thing by the end of this year.
Perfect. Thank you so much for that question. And final question from me, MIL, they're the first tranche of the public bond. Oops, is Gary still here with us? Oh, it looked like he fell off.
I'm here.
You're back. Perfect. MIL, the first tranche of the public bond, it's maturing in the next few months. Is Mayberry gonna roll this refinance this note coming up? This bond tranche coming up?
The probability is high. It's too early to say. And I don't want to give prejudice to anybody who's not listening to this podcast. But I think we've done well. We've made a lot of money in terms of the money that has been loaned to us, and we're happy that the people put faith in us that we'll be able to positively do that. And the numbers actually show that. So, the question is, as we get closer to maturity, we will be putting information out indicating whether we would roll, we'll upsize or downsize, depending on what market opportunities are.
Okay, perfect. Thank you for that. And that will complete my question and analysis section. So just to recap, everyone, Mayberry continues to increase shareholder value. They remain a strong dividend-paying stock, robust asset base, and capital base, and finally, it's trading below its current book value. As Gary mentioned earlier, inflations are now within the bank's target range, so we can expect rates to start trending down. We all can appreciate the inverse relationships, so the market is going to be correcting itself pretty soon. And both MJE and MIL are actually trading at discount, so you can take advantage of those before the opportunity removes itself. And that's it for today's discussion. I'd like to thank our viewers for tuning in. Big thanks to the panel, Mr. Berry and Mr. Pear, for making this a great discussion. If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So give us a follow to learn all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, wise investors, slow and steady wins the race. Thank you.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.